And welcome back live to Safe Money Talk Radio. I'm Kathy DeWitt Dunn. Thank you so much for joining our show today. Bruce, it's great to have you back on the show.
Great to be here. Thanks. Exciting stuff happening.
Well, it's real exciting. I mean, if you take a look at these strategies that we're working with, how you can really, timing is everything, don't you agree?
It really is.
And I suggest, and I'm not trying to incite fear, but I suggest this market probably is looking to correct here in the future. And what's the risk? The risk is that maybe it could go up 5% more. But it could easily slide off 10, 20, or 30% rather quickly.
Sure. One of the fallacies people say, well, I'll get out. If it starts going down, I'll get out of the market. Oh, really? Who are you going to sell to if everybody's running for the exits?
That's a good point.
There's no buyers at that point. Everybody's sellers. I remember several years ago when the news reports showed people lined up around the building at some of these big brokerage houses because they couldn't get through on the phones or online, so they went to their broker. People were lined up trying to sell. Problem was nobody was buying.
Yeah, I mean, that's the whole point of the market, right?
It's a panic.
Yeah. Well, if you take a look, and I really thought about some of the things you said on last week's show when we were talking about the real estate market and how when the market rebounds, and what we've seen here recently, that real estate is really where people would like to see some really positive returns. And historically, real estate's really where it's at.
That's right.
But one of the things that's really nice about this particular index, and let's just go back to 2008 and 2009, where the market just crumbled, and so did real estate.
Right.
Well, how about having an index where your principal's guaranteed, where you would not have had to suffer in the real estate industry by having it inside of this index?
And people don't ask this question often enough is, well, how can I get such great returns in real estate? Well, there has to be some turmoil and some trading going on in the market. Back in 08, actually between 06 and 08, we saw the mortgage crisis unfold. Well, what happened was people had been chasing all these properties with easy to get money, and therefore the properties drop significantly when all of a sudden everybody's selling. Same thing in stocks. If everybody's selling, everybody's running for the exits, those prices will plummet.
Well, and that's
that creates
scary.
Opportunity for the buyers.
And that's what's so nice about this particular index, because also with it having a REIT inside of it, the fact that you get the upside. Now, what we didn't talk about in the first segment was the fact that when the markets recover, let's just say that we go through another one of those particular indexes. Well, what's going to happen is that with this particular Dow Jones real estate index, it's uncapped.
That's right.
So it does have a spread which averages out to be 1.9% annually. Okay. So the first 1.9.
That means the company makes the first 1.9% and you get everything above that.
Everything above that, uncapped. So we always hear about all these different things with fixed indexed annuities and everything that's gone on in the market.
Right.
Oh, you can't make any money. You could only make 3 or 4%. So if I have a real estate index that goes up 10, 15, or 20%, and I have a spread of 1.9, I get everything 100% up to what it performed at less 1.9.
And a lot of people think, especially around the Dallas area and most of the major cities in Texas, real estate values are going up because Texas probably has more new jobs than almost any other state that we know of. And the good news is that it is helping real estate values a lot here. Now, the Dow Jones Real Estate Index invests in properties all over, not just Texas or New York or wherever.
Good point.
And so one of the things to look at, I have an acquaintance who's very high up at a 4-letter agency, and what is happening now is the Fed is starting to release some of the inventory they've been holding for the last several years of foreclosed homes. Now, if you're in Detroit, nobody cares because you can buy houses up there for about $500. However, in the nicer areas, there is still over 20 million foreclosed homes that the Fed holds. And they have to release those eventually. They didn't want to just dump them because it would crush prices everywhere.
Right.
So they're letting those trickle out in a controlled fashion. And the good news is that makes for more opportunity for these value buyers, and that's part of what this index is. They're out buying properties that they can increase the value significantly. That's the way to do real estate. Obviously, just like stocks, buy low, sell high, but add value to it and rent it out forever, and you create an income stream. Well, you don't have to do that. They do that inside the fund.
Exactly. And if you take a look at real estate and all the buyers and everybody, they're all putting their money into real estate to generate cash flow.
Right.
So how about generating money that's going to give you cash flow later down the road
without having to do the work?
And with your principal guaranteed. If you'd like to schedule a free appointment today, we're going to give you the historical data numbers on this here in a second. But call us today, schedule a free appointment. Remember, we are out in Fort Worth, Dallas. We have offices now in Austin and Waco. We'd love the opportunity to visit with you. The appointment is free, but please call us and leave us your telephone number if you happen to get voicemail. We are getting a lot of phone calls because a lot of people are taking a look at this option. The number to reach us today is 972-473-4700. Again, that's 972-473-4700. And Bruce, one of the things that does concern me a little bit is just the fact that there has to be a sense of urgency, because with this particular index, with what we may see and what could occur in this marketplace, everybody is running with this particular company to take a look at their options. So once the bucket's full, it's full.
That's right. They can only sell so much of this, and then they may turn it off to new investors.
Right.
So it is one of those things that,
that's a great point.
You do want to be the first on your block to get this, because I don't think they'll keep it open that long. We see things like this that companies come out with as a new strategy, and it doesn't last forever. There's only a finite amount of real estate out there that these companies can buy, and once this season of the real estate buying is over, and it will never go away forever, but once the season is over, then you just have to wait till the next time it happens.
Right. And we're going to take a look at these numbers, and if we're on $100,000, the lowest performance in a 10-year window, Bruce, was you would have been sitting at about $200,000.
That's right. It was about a 90% increase over that 10-year period, which is not bad at all.
That's awesome. Well, that's also the lowest performance, and then the average. I like the average.
Averages are good, 140%.
And then if we take a look at the highest,
240%.
So really, the great news is there's some great ways to make some money in real estate without putting yourself out there and having to do all the work and having to pay the 6% commission up front or the 5% on the back end.
And we don't have to guess on perfect timing either.
Well, and also you don't have to worry about it generating cash flow. What we didn't talk about in the segment too is that this is a 5-year lock, but then they go back and they give you a 4% minimum guarantee per year times 5 years. It's 20%.
Extra 20% just for playing.
Right. Well, and we also need to say that this is a 10-year commitment, but there's lots of different ways to generate cash flow, to have.
That's correct.
To also be able to have liquidity and things of that nature.
You can blend this strategy with one of the other indexes and have liquidity and access to your money.
Yeah. So if you have IRA money, 401k money, and you'd like to schedule a free appointment to come out and visit with us, we'd love to see you. Remember, we have offices in Fort Worth, Dallas, Austin, and Waco. I'll tell you, we've really had a great time here in the last couple of weeks visiting with everybody on this particular index. And remember, your principal's guaranteed. You're not at risk in the market. When we come back from this segment, we're going to talk a little bit about how the insurance companies are able to provide the returns that we've talked about today. That's one of the questions that we get all the time.
How can they
do this? So we're going to really focus in on that on the next segment. But call us today if you're 59 and a half and you're contributing to a 401k plan. You can roll it over into the strategies we're talking about today. And just because we're talking about one strategy doesn't mean that that's the only thing that we're working with. This is something right now that people are really running to because of the diversification. It's not correlated to the market, and it has some great historical returns. The number to reach us today is 972-473-4700. That's 972-473-4700. I'm Kathy DeWitt Dunn. We'll be right back.